All right. Morning, everyone. We're going to get started on time today. Um, let's kick it. All right. So last night's session in the States is a bit of another drift, a little bit higher, just kind of moving out to the right still on the chart that we have, as we have been for 3 or 4 months. We did have a little bit of an outperformance on the day by the NASDAQ and the Russell 2000. It wasn't a big day by the two, but definitely outperforming the other markets. So guys coming in and either covering some shorts or nibbling on a little bit of higher risk appetites and moving back into some of these high beta stocks. We did have some good data out of the States last night. We had the U.S. markets manufacturing PMI numbers out yesterday that were 56.2 from 55.4 in April, which is better than expected for this month as well. And we also saw the sales of previously owned homes increasing for the first time in 4 months. So we saw some better than expected data there, just kind of continuing on the same path of better data. We did have jobless claims that came in a bit soft, but the moving average is about right. The revision for the previous month, I think, was better by 1,000 or something. So home builders on the day actually rallied on the home sales numbers, and you also had you had some of the ones that have been struggling, the Best Buys and the Dollar Trees and the Williams-Sonomas of the world that were up on the day as well. All right, in China, we saw a continued rally on the back of the States. Nothing too significant. Nikkei up close to 1% on the close right now. But the rest of the market's kind of just barely up. We have had the yen that weakened out again yesterday, down to about 101.80, continuing to buoy the Nikkei there. We also had some of the Chinese property developers that rallied a little bit more on rumors of restrictions on home purchases that might be eased. And then in Sydney, we saw the bank shares kind of leading their drift up rally. So there's really very little leadership, but just kind of following up a little bit on the heels of the U.S. Market. Okay, this is a chart that we've kind of been looking at frequently here for the last few months. This is actually, I don't want to be putting too much of a bearish spin on what's going on in the markets at the moment and keep kind of showing some of these bearish indicators, but this is another one that really looks incredibly scary. If you can see there, in red, that's the NYSE margin debt. You can see that was at all-time highs. It still more or less is up there near all-time highs and has pulled back off of its peak. You can see there in the blue, that's the S&P 500, and the S&P 500 always is a bit of a laggard to the actual NYSE margin debt, which seems to really be a leading indicator of sell-offs ahead of bear markets and recessions. If you look back in the 2000 peak and the 2007 peak, so yeah, this is possibly signaling some rough times ahead in equity markets. So just keep that in mind. We'll continue to follow that. But obviously, if margin debt continues to fall, it's probably going to be pretty difficult for us for the U.S. equity markets to continue to rally. So we'll watch those numbers going forward. In corporate action today, we really got nothing. We have the JSE that is going to go ex-div over the weekend. On Monday, we've got the regular at 350 and the special at 50. And then in market data that's coming out today, we're going to see, or we did see the German GDP numbers. What were they? Actually, not 100% sure what they were. That came out at 8 o'clock. Say that again? And the quarter on quarter? Okay, 0.8% came in line on quarter-on-quarter number. It looks like a slight beat on the year-on-year number. So decent number there for Germany. We've got the IFO numbers coming out as well, which have been reasonably market moving. Retail sales out of Italy, and then later in the States, new home sales. So not a whole lot to really give us too much leadership. on the day in terms of market data, so we'll continue to follow the market action again. All right, first thing we're going to look at here is Steinhoff. Let's pull that back out. Okay, Steinhoff really yesterday made another nice turn up toward the end of the day, and really this is kind of been a perfect little wedge setup here, little maybe even you could call it a little bit of a flag, and we basically bounced up out the top of that, and we're making the exact same formation again on top of that, top of support, and you can see they're very close to breaking out to the upside on resistance on the same formation in Steinhoff. So I would say if we can get above 54.30, 54.40, we're probably pushing up to the upside and could possibly take us to new all-time highs in Steinhoff. All right, next one is FirstRand. FirstRand has been really just consolidating for the better part of a month, pushing out to the right and really giving us nothing. Quite wicky. It'll trade down in the morning 30-40 cents, and then it'll trade up in the afternoon 40 cents, and then kind of close only up 20 cents or something along those lines on a daily basis. And you can see there how many times you've had these wicks kind of move. Yesterday was the first time we got a close closer to or more or less at the highs, and the last that actually puts us above this little resistance level, and it's really looking like we could possibly push up about another rand on this breakout and getting us through this 40 rand level possibly today. If we look at next one, we'll look at is Sanlam. Sanlam, you can see here really breaking out on a closing basis as well. It's been consolidating up here. It's been consolidating up here at or near the the highs to break out, and yesterday I think is just confirmation. The target on this is actually quite reasonably large. It's about 5 rand to the upside here through 59 from 54. We'll be looking for about $5. It takes us up to $64 for all you Sanlam shorts out there. Be wary. And let's look at MediClinic. MediClinic, we were all over this one. Just it was such a tough fight after the trading statement came out to really get this thing up. I mean, it was a beautiful pattern here when we broke out, and we actually came back and consolidated just above the breakout here beautifully. But it took a little while to get it going. But now we're kind of popping up above the top end of that little consolidation range at 78, and obviously above what were all-time closing highs. And we've got a bit of a little inverse head and shoulder pattern here going on. This being the head and these two being the shoulders. A little inverse head and shoulder pattern going on, which should put a target quite significantly higher than this. Probably another $5 or $6 to the upside here in terms of that pattern. And then the last one I will show is Woolworths. Woolies really just moving out to the right here as well, putting in a little bit of a wedge pattern, very similar to a lot of the other patterns we've been seeing lately. And path of least resistance definitely been up on pretty much every stock on the entire index. So yeah, we get a little breakout here to the upside here. This thing could be tracking all-time highs and rather quickly. Could be above 80 rather quickly. That's it for today, guys. Thanks a lot. Trade well.